How's it, Brian here with Midwest Market Solutions. This is the closing market commentary. It is Friday, January the 10th, 2014, and wanted to let you know of a disclaimer here. A couple things. This risk of loss in trading futures and options substantial, and each investor and or trader must consider whether this is a suitable investment. Past performance is not indicative of future results. There is no guarantee that any advice we give will result in profitable trades, and we'll read the other part of the disclaimer there as well. Everything that is mentioned today is copyright by Midwest Market Solutions 2014. Now that we have that out of the way, let's look at what's going on in the markets today, and we've got some real interesting charts to look at and talk about. We look here at our quote board. March corn 19 3/4 higher today. Obviously the report information was major market mover, and we're going to talk about that a little bit and also look at how the charts are setting up. New crop D's up 16. We had March wheat, however, down 16 1/4. Kansas City 13 lower. Minneapolis off 8 3/4. The soybeans, you can tell by the bar here, had a huge range near opened and closed near the lows of that range. So bearish spike on this bar, only 4 cents higher in the March, July up 4.5, and November down a couple cents. Cattle futures 60 cents higher in the Fed cattle. That's a chart we're going to look at. The rest of the months were higher. Feeder cattle were lower, 75 April and 55 in the May, with the higher corn prices weighing on feeder cattle. And then we get to the hogs. We had some gains today, 55 cents in the Feb hogs and 22 in the April. All right, let's look at first chart here is going to be February cattle. Now you notice on our chart we have a triangle pattern or a wedge pattern, and of course markets are going to break out one way or the other eventually. As the triangle gets smaller, they end up breaking out. They broke out to the upside on the Feb cattle back on December 27th. This was due to stronger than expected cash trade right after Christmas and a threat of cold weather. Now what we look at, or what we use a lot of times, is called a target shooter, where we use Fibonacci projections instead of retracements to determine where this market may go, and I think you're going to find this very interesting. So we use the high from this time frame to the low, and look at that. Our two targets, one is major support area for the February cattle at 136.35. The other target, the second target, major resistance area about $1 higher at 137.35. So what we see now, we take this target shooter back off, is we've hit our targets, we've rallied up to the second target, and we've kind of stalled out and had a resistance there. We've got, notice, two pink bars meaning two inside days or consolidation days, and it looks like cattle market is starting to stall here after hitting some upside technical resistance. Next chart I want to put up here in the cattle market is a cattle spread chart. This looks at the spread difference between April and June futures. We also had a breakout here on the charts on the spreads about 620 on January the 3rd. We started to break out up above $7, but look what happened to our technical indicator. It's nearing an overbought, oversold situation to the wrong side of things. While we move up in prices, this indicator should be moving higher like it did here. And you notice here that as we moved higher in prices, the indicator has started to move lower. So that is actually a bearish divergence, and it tells us the momentum in the cattle, at least the cattle spreads, is starting to fade, and that is going to be a little bearish for cattle futures. All right, let's look at corn, which was a major market to focus on during the day here. Huge outside day higher in March corn. The market was anticipating a bearish report and was trading lower, hit contract lows, and then rallied. You notice we have a little downtrend line here from the December highs to, on the 11th to the 23rd, and we've eclipsed that. We also took out this resistance point around 430, closed above it. So I think Sunday night into Monday we should have some follow through. We could get up into this resistance point over here. If we extend this is about 441. And the fundamentals really don't suggest that we get much in the way of better than this price level. Certainly going to see some farmers selling creep into the market in here, and we want to use our target shooter for a place that maybe this market's going to go towards. We've come up with 444 and 3/4 to 445, and a couple more resistance points around 453. So this is an area where we run into resistance before, and I think that's most likely what's going to happen with this corn rally is we're going to hit this target around this 445 area and stall into some resistance at that point. So we should have some more follow through over the next several days. All right, if we look at soybeans, this is our March soybean chart. We have the uptrend line broken back on December 26, 27. Prices fell. We found good support. We talked about that in one of our other videos at this 1265 area. Good weekly support. A little bit of resistance here. Notice we went through it today and closed back into this trading range. So not much to tell from just a pure technical standpoint. You're still in this little box of trading range, and with this poor technical action, we had the big range type day and closed well off of the highs. It usually, but not always, gives you an indication that we should see a pullback in prices. Still looks like we're in a downtrend to me, and that indicates that, again, should have a pullback in the prices. So we'll look for corn to be higher, beans to be lower over the next several days. All right, we're going to sign off here. Hope you have a great weekend, everybody. Give us a call if you have any questions. This has been Brian.